the Treasury going back in through Fannie and Freddie and starting to buy up. I think Brian, the number is what, $200 billion of
Right.
mortgage-backed securities. So that's I know that got our attention. Talk a little bit about that and what we think the potential impact in our space could be.
Sure. I think it's pretty interesting in the sense that that number is certainly not insignificant. At the same time, it's not something where someone's going to vacuum up all the outstanding mortgages or something crazy like that. It's probably kind of like saying that the amount of the Fed's reversal or the amount that they're buying is kind of doubled, right? Or in a relative sense, it's about double of that. And the other thing is that the 200 billion hasn't been discussed. Is going to be a one-time thing? Are they going to do a little bit each month or
Mhm.
whatever? But still, the market the market reacted pretty quickly, and spreads tightened by about 15 basis points, just kind of at the outset. Um, and I think if you think about what that impact is, right? Trump is saying that he wants to help home affordability, and so the initial thought and kind of where people are seeing where mortgage rates might go is on the order of, call it 25, or even if it was 50 basis points, right, to help on that mortgage 30-year mortgage rate. That wouldn't be enough to kind of, reawaken the housing market, so to speak. Right. People might be able to say something like, oh, I got a five handle again on my mortgage, or high fives or something. But probably still not enough to say that this is going to, just get a lot of people into homes and address affordability and that sort of thing. So it's a positive for the mortgage market. There's certainly been flow through impact on some non-agency, and it's probably marginally tighter, I should say. So I think people are still waiting to see the broader impact and even just the logistics of how it's going to be done. As far as it relates to other parts of non-agency like legacy, I think a lot of the seasoning that we have in bonds that we traffic a little bit more, that probably is still going to be a little bit more along down the line. But again, broadly speaking, it's good for mortgages and mortgage credit as well.